Hello, traders. It is Wednesday, 8 a.m. Chicago time on another just gorgeous day outside. The weather's really important up here. I know it's probably a weird thing to mention in the morning for many of you. Uh, it is the 15th of May, 2019. Hopefully, you hear me loud and clear. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a market that has some risk off. The ES has been selling. The indices have been selling throughout the extended hours. It just more jitters. Also some poorer numbers that came out overnight. Um, so risk off this morning. The VIX is up. The VIX futures are up almost 1.5%. The bonds, the U.S. bonds, are up 24 ticks. It's 0.5%. The Bund is up 69 ticks, 0.41%, and the 10-year note up 13 ticks this morning, followed by the Japanese yen, gold, and the U.S. dollar. So you can see that the deck is firmly stacked um, for risk off for a risk off or flight to safety this morning. Crude oil is the laggard today, down 1%, 1.1%. The DAX is off 0.75%, and the Russell is down 11 points. Overnight, we got a whole bunch of numbers. GDP growth came in line in Germany. GDP growth in Europe came in line as well. Inflation in Canada came in line, but the retail sales, advanced retail sales for April came in pretty poor. This morning came in at negative zero point 0.2 versus positive zero point 0.2 expected. Um, and also there have been comments from the Chinese government. The China Foreign Ministry spokesman Geng Shuang reiterated as it is the U.S. that is defining trade dispute as trade war. China is only taking actions in self-defense. Trade war not in interest of China or U.S. This came out at about 3:18 a.m. U.S. Eastern time, and we could see if you look at your charts, the market started to head down. Um, Several comments were made. China will take countermeasures to U.S. bullying. It's the U.S. who fired the first shots and playing with maximum pressure. For some time, U.S. has been abusing national power to smear Chinese government companies. It is not honorable. Says hopes U.S. stops using national security as a pretext and create a fair environment for Chinese companies. When asked about Huawei, trade disputes will have some effect on Chinese economy, but can be overcome. So this is where we are, just this continued narrative of pushing up, and uh, then this kind of thing comes out, and then the market pushes down, and so on and so forth. So that's where we are in terms of what's on deck and what's ahead for today. We're waiting for industrial production and cap utilization in about 10 minutes in the US. NAHB housing market index at 10, business inventories at 10, ECB's KER at 10:15. Then we get the crude oil inventories at 10:30, expecting a draw of zero point 0.8 million barrels. Gasoline expecting a draw of 0.299 million. Fed's Barkin speaks at noon, ECB's Prait at half past noon, and so on and so forth. So we've got some stuff coming in. Looks like three Fed speakers or four central bank speakers today, and some minor releases, plus the crude oil inventory. So I'm expecting the auction to be governed by news flow yet again. Let's take a look at what we expected yesterday versus what we got in our review segment. Uh, in our review segment. So the main idea yesterday, given how we appeared to stabilize on Monday, the main idea is that we may drift down into value low of the prior day, 2808 or so, and then start rolling up. And I was looking for 2850.50 as the key test area above. If we hold above the low of yesterday, as discussed in yesterday's Trader Bite, then we are likely to push 2850.50 or towards that. The mid-century figure, an important area to test. Above there, 2858 is also a major area based on price action as well as a volume-based area. The secondary scenario is that we follow the same pattern. We go sideways on the open, potentially test 2827, and then roll over 2826, 2827, then roll over and fall out of the low, out of the range. And in that case, we would be continuing one-time framing down, and the target would be down at about 2765, 2764. That did not happen, of course. That would be the second scenario. Let me see, the label's missing here. There we go. That would be the secondary scenario. The primary scenario, again, was 2850.50. What did we get? Try to take a look at this on the trigger chart. Oh, the trigger chart is too noisy. Let me change the periodicity here. It's easier to read on the trigger chart because then you get to see the full narrative and the rotations. Here it is. We open up, we push down into 2821, nowhere near. We opened a little higher than expected, than what I was talking about. We attempted to push down a little bit, and then we got the first real big move up to 2832.75. Pulled all the way back. This looked like an open test drive up at the open until the next rotation, which was this, which was an impulse in the opposite direction, and then it started to drift up. I was looking for the short after the impulse. I was looking for the short at mid right here. This would set us up for a short at mid, a legitimate setup, and then we would look to target the 2813 area on the short from about 2826, and it just it didn't work out. The market ended up grinding up. There were some indications on the tape that this was not going to hold to the short side. It looked pretty well supported on the retest, higher low. And as the market was pushing up on the heat map, we could see bidders. I'm going to try to show you that simply because I just think this kind of stuff is really interesting. Trying to find it for you. 1 second. Un moment, s'il vous plaît. Here we go. So here's a quick crash course in order flow reading on CT Bookmap. Here it is. So we look at the pushback. Now remember the mid was at that point, the mid was 26, 27. So the mid was right here. This is where the mid was. And so what we see is we see it retesting that low, not able to get to the prior low. And then as it pulls back, you can see that there's some size coming in here. This is size coming in, and the size trading with some stacked underneath it. I know this is a really small image, and then it bounces up, and then you can see the size coming in and becoming white again, whiter the brighter. Meaning more liquidity. And then as on the next rotation, as it pushes up and it pulls back, you can see size coming in and trading out. On the next rotation, as it pushes higher and it pulls back, you can see size coming in, that little white stuff there, coming in and pushing this thing up. And now we're through that 27 area. And then what we see here, this is basically a flush. This is basically the flush of those who got squeezed on the way down. So this is basically the mid of the rotation and triggering stops for those who trade the mid, who look at the 50% pullback and they get squeezed out. And you think, well, they're likely to be done and might roll over now. Well, not really, because as it's pulling down, you could see it's being bid, being bid, being bid, being bid right there, being bid, and so on. And we saw that all the way through. And so I stood aside on that mid short where normally it is a setup. And I generally speaking, if there's a setup, I will take it. I can't pick and choose which setups will work or not. And as it gets into the big liquidity, now here's some really big liquidity up here at 35. 35 again, playing is steadfast and coming back into the market. 35 has been playing now for 2 weeks. You can see that size from very early on, just holding steady, and it pushes through, and it manages to do what? It manages to just squeeze right through. You can see the CVD is really squeezing out, is really buying. There's some really strong effort from the buyers on the way up. So that's what happened yesterday. Back to review. We managed to squeeze above the prior day's high right here. We extend the IB up. So we have range extension up on a normal variation day, and then we end up going to where? We end up going to 28.50 on the dot right here. We go to 28.50.50 on the dot, which is where the stock zone was, and it pulls back almost to the IB and then sits sideways, and it finally starts to roll over later in the session. 28.50 really shut the door for those buyers temporarily, and you can see there's quite a big fight up here in the 48 to 50 area, and then 51 to 53 area. There was a lot of trading, a lot of exchange of hands in terms of contracts up there. The profile over the overall shows no consensus. That price discovery was very active across much of the range, and there was no consensus. Ultimately, we finished in balance. Why do I say we finished in balance? We ended up building the point of control pretty much on top of the prior day's high. We ended up building the point of control on top of the mid and on top of the IB high, with a lot of things happening all at the same time right here. Just a lot of noise in this area, and that's where we ended up finishing at 28.39.50. So I'm watching that area pretty closely. This morning we're trading down here. So on a relative basis, against yesterday's range, you can completely see. I mean, anybody who's looked at a chart for 5 minutes can see that. Wait a minute, this thing has really given up quite a bit of territory, and we could see that 33 to 35 area is going to play a significant role yesterday. You can see that stock zone here. That's a primary stock zone for today. We may see some turbulence in here, but I expect to short that first test into 33.50 through 35, and with a clearly defined stop above the open. So you need to keep your stops pretty wide. Also, something I mentioned in the convergenttrading.com community chat room is that the rotations are now wider. We've seen volatility expand a little bit. So stops now are no longer 3 to 3.5 points. They're 5 points, 4.75 to 5 points. The normal rotation for the ES right now is 4.5 points. So if you're trading inside of 4.5 points, or putting stops within 4.5 points of a normal rotation, top to bottom, on a 1 minute chart, you're well within the noise. And I'm sure you're not trading on anything smaller than 1 minute anyway. So you have to expand your size, expand your stops, reduce your size. That's the order of the day, and that's why the MES, MNQ, M2K, and MYM are here. It permits you to cut your size, expand your stop, and stay in the game and not risk too much. And that's where you should be trading if you're trading less than $3,500 per contract. If you have less than $3,500 per contract in your account, you should not be trading the minis. You should be trading the micros, and therefore preserving yourself and preserving your capital until you're funded enough to go to the minis. Okay, that's a lot to take in, I'm sure, but it's for real. So yes, in the overnight session, we form this ascending triangle type of thing, and then we fall off right on the Chinese minister's comments right here. We fall off. Where do we pull back to? We pull back to the mid of the session on the dot after the impulse down. If I were awake at this point, which I think I was because my cat's driving me nuts these days, just scratching at the door at night. But I think I was awake at about 2:30 a.m. Chicago time, which is when these comments came out and the drop happened. That would be a setup for me to get short, look to exit as a primary target ahead of that 33 and a quarter by 2 points, 2 ticks, 33.75, and then leave your runner on to target the next area down, which in this case would be the prior day's low at 21, and that would have been filled as well. The overnight volume is lower than it's been recently. It's been falling slowly. Yesterday was 414,000. Today it's 398 with about 13 minutes to go. So it'll be about the same, but it's no longer 500,000 plus. Things are calming down a little bit. The overnight profile is showing that the market accepted higher prices with the point of control up at 28.4475, and but it's in complete price discovery mode. You can see that profile is just not this is a very poor color for a profile. There we go. So you could see that the profile is very, very jagged, and there's no real price consensus at all. This looks like it's likely to continue lower. It's likely to resume its trip back down to 2,800 again today. So let's get into our time is running out here. Let's get into our expectations for today. The expectation for today is, shift this over so we can draw. The primary expectation for today is to the sell side. It looks like we made a valiant attempt to push prices higher. 28.50 shut the door, and I'm looking for the market to push this overnight low, resume, become responsive, come back into 28, 26, 27, get tangled up. I expect it to fight here for a little bit, potentially push into 33.50, but ultimately I'm looking for it to push down through and then start seeking down by not much. I'm really not looking for this to push very far. It may test that 2802 and the 2800. We have not tested the 2800 in the day session just yet this week, and it may do so today, but the primary expectation is to the downside this morning. The secondary immediately responsive to push into 26, 27, get weak, impulse down, and this is likely to drive through 2800 and start working its way down into 2784.50 before the bounce. The tertiary scenario is initiative down, push into the range of Monday, and then respond up, come back to 33, get tangled, and then get back into balance and just hang out up here to cling on. Now, it's a more random environment. It's a more random environment right now with the news. Okay, so any one of these can play out. The more important thing you should take away under these circumstances from these scenarios is what are the key areas? The key areas above 26, 27, and 33.50 are really important sell areas with targets at 2802, 2800, and then beyond there 2790 and 2784.50. So those are the real levels that we're looking to trade to if we get short or long. These are the areas to watch. Anything above 33.50 is likely to squeeze into 42.50 and then 50 again, 28.50. The mid-century figure again. So as long as you know that those are your major lampposts or milestones or markers, then you can, once you get a position on, you can help yourself hang on by knowing that these are the key areas above or below. Those gray areas on there are called the stock zones. That's a trademarked name, and they're available to Convergent members and updated by me on a daily basis for this product. Good luck today, and I'll catch you tomorrow. Hopefully, you're able to gain something from today's speedy talk. Take care.